Hi guys, welcome back to my channel. If you guys are new here, my name is Mel and welcome to the second episode of the New Money Stock series. I missed you guys last week. I do apologize. Had a lot going on last week, but I'm back. This is episode 2 once again. And if you are new, this series is a series where I give the everyday investor, trader, just some insight as to why the markets played out the way they did. Some macroeconomic news that may, make or break your investments or your trade setups for the week. And yeah, just kind of keeping everybody in the know. So with all that being said, let's go ahead and get into the video. All right, so because I missed you guys last week, I know that if you were watching the markets, you saw like a massive sell-off in stocks when it came to the stock market opening on Monday. So the Sunday before, I did put out the first episode of the New Money Stock series, and we were talking about how the market was kind of gradually starting to sell off. Well, Monday, it hit the fan. Everything was down. Everything was red Monday. We saw sell-offs that we hadn't seen in 2 or 3 years that happened on Monday. For starters, the Nikkei on Monday was down 12.4%, which is the highest sell-off or largest sell-off that we've seen in the Nikkei since 1987, since the great stock market crash of 1987, Black Monday. So if you're not familiar with Black Monday, please do look it up. If you haven't heard of it, it was one of the most, worst day. It was one of the worst days of the stock market that has ever been seen. So yeah, the Nikkei sold off 12.4%. And because the Nikkei sold off, that rippled into US markets. So I want to say, when I stopped recording with you guys on Sunday night or Monday morning, maybe around like 3 or 4 o'clock, I looked at my futures account, or I looked at the futures index, and the indexes, the NASDAQ, the Dow, the S&P 500. I want to say the NASDAQ was down almost 5 or 6% at its lowest at one point. Of course, we did recover some of those gains. If you open up a stock chart, you will see that, as soon as the market opened, those lows were instantly bought up. So the dips were bought when the market did open on Monday. And that was pretty much the bottom since then. But to kind of give you some numbers, on Monday, the Dow, even though we did have some recovery, the Dow was down over 1,000 points. The S&P was down 3%. The NASDAQ was down about 3.4%. 3.4%. And the VIX, oh my God, guys, I want to say the VIX got up to like 60, which is, if you don't know what the VIX is the fear index. So they say that once the VIX gets to 30, we're, starting to get fearful, but anything, greater than like 35 or 40, we're at like extreme fear. Well, baby, we were at 60. Yeah, the VIX, but it did sell off. Just like stocks, were bought up, the dips were bought. The VIX did, eventually end up closing much lower than where it opened, because the S&P 500 and the VIX has an inverse relationship. Okay, so when the VIX goes up, the S&P goes down, and vice versa. So now people are wondering, is this a dead cat bounce? So this past week, we've seen the markets rally a little bit. So a dead cat bounce basically means that when investors short the stock market, meaning that they are, betting that the market is going to go down. Well, when you short the stock market, you have to buy shares back to make the profit. So even though you are short the position, when you buy the shares back, it could make the market go up. And so a lot of people were trying to figure out, is this a real rally? Can we count on it? Can it continue? Only time will tell, of course. I do think that this may be that bottom that we saw from that sell-off is probably in. I don't think we will probably go back down there, honestly. And I say that because I can kind of tell based off of, I was short positions. So for example, I did make money that day. If you go back and you watch my New Money series, episode 1, I was short SPY put. I was in some SPY put. So I was short going into Monday. I did not think that we were going to have that dramatic sell-off. But it worked out for me because when the markets opened on Monday, I got out like instantly. Once I saw that things were being bought up, I made like $1,000 on one SPY put. So kudos to me, I guess, for that. And then also in that New Money episode 1 series, I mentioned that I was in a Netflix put. And I actually got out. I think I made like $400 on it. I got out a little early. I was planning on holding it, but I got out, and honestly, thank God I did, because if you pull up a Netflix chart now, you'll see that the stock has rallied a lot. Okay. So that's why, once again, like I always say in all my videos, risk management is so important. I will link that video once again in the description box below. Please check out risk management. So I got out, and I'm not short any more positions currently. I'm actually only in one position, which I'll get into that a little bit more in Trader's Blog and go over more of my trades for the upcoming week. But yeah, so I am completely out of all short positions. And then another big event that happened, I mentioned too in that video that I was kind of concerned, or investors were concerned, because Warren Buffett sold some of his stake in Apple. Okay. And so, because like I mentioned, Warren Buffett rarely does any selling. He's a long-term holder. So people were wondering, like, why is he selling Apple? Is it something that we don't know that Warren Buffett knows? But Berkshire Hathaway, which is Warren Buffett owned, actually has a new stake in a company that I absolutely love. I shop there, which is Ulta Beauty. So I was excited and sad at the same time when I found out that Berkshire Hathaway invested in Ulta. Excited because it's like, oh, finally Ulta is gonna get, the love that it deserves, because if you follow Ulta, you know that it has been sold off in the past, couple of months. But I was sad because I was looking to add to Ulta in my long-term portfolio. And when that happened, the stock rebounded tremendously. So I don't think it's too late, though, if you are someone who is watching Ulta, or you are trying to see if you wanted to invest in Ulta. Of course, do your own due diligence. This is not financial advice, but me personally, for me, don't think it's too late. I am still planning on adding it to my portfolio. So do it with the information that you want to. But yeah, that's just what I'm going to be doing. Ulta has seen somewhat of slowing in sales, but Ulta's PE ratio, which PE ratio is the price to earnings, which is the price of the stock relative to how much the company is earning, which, it depends on what type of company you're trying to invest in when it comes to what's a good price to earnings ratio. A company like Nvidia that's growing tremendously, you're going to be willing to pay more for that company, or you're going to be willing to have a higher multiple. Like Nvidia's PE ratio currently is like at 44. You'll be willing to pay for Nvidia at a higher PE versus like a Ford. Ford's PE is probably at like 6 or 8, but Ford is not growing. They're an older company. You're not going to pay for something that, that's not really growing as much. And companies like Nvidia, Meta, your larger cap companies, they're growing more than like, your older companies like AT&T and Ford would. So, but yeah, Ulta's PE is at 14 currently. And even though sales are, have been slowing over the past quarters, Ulta is doing things that could potentially change the narrative. Okay, so like, for example, they are expanding to Mexico, which could, open the doors for more international expansion. So I'm excited about Ulta. I think Ulta is undervalued, and that's just my take on Ulta. So be on the lookout for Ulta. Add Ulta to your watch list if you're interested in Ulta. And then another big thing that happened last week was Chipotle and Starbucks. So if you've noticed, there was a big dip in Chipotle, I believe around about 8 or 9%, and there was a big spike in Starbucks. And that's because Chipotle CEO is leaving Chipotle to go to Starbucks to kind of change their situation around. Starbucks has had a really hard time these past quarters. Sales growth, the stores have been declining. So yeah, Starbucks, as much as I love Starbucks, I still go to Starbucks. I shop there, but I don't know if you've ever heard the phrase that the company is not the stock and vice versa. Yeah, I love Starbucks, but I wasn't trying to invest in Starbucks at the time. But now that Chipotle CEO is going to Starbucks, people, investors are thinking that there may be a turnaround in how Starbucks does business from here on out. So it's going to be interesting to see. But if you were wondering why, that happened, that is why Chipotle was down and Starbucks was up. And the CEO going to Starbucks, I don't think it goes into effect until like September the 9th. But just the news alone was exciting for Starbucks and disappointing for Chipotle. All right, so we got the big events out of the way. So let's get into the previous week, just kind of a little bit more in detail. So I mentioned to you that the VIX did spike when those sell-offs were happening. It spiked up to like 60. Now this week, as of Friday, the close, the VIX was around about 14.9. So we are way, way off the highs. So the VIX is down. Most stocks, I mentioned in that video on episode 1 that a lot of the stocks were below their 50 and 100-day moving averages, but a lot of them are back above the 50 and the 100 days. We had some good news to why a lot of this has happened. So the VIX being down, which means that, some of the fears starting to leave the markets, and the stocks being back above their 50 and 100-day moving averages. So one thing that happened was retail sales came in a little bit, better than expected. The retail sales were up 1% relative to the 0.3 that was expected. And so this kind of, let investors know that, oh, well, hey, maybe the consumer maybe they're not doing as bad as we originally thought, like the previous week. And then you saw the weekly jobless claims for this week. They were a lot, they were a lot more tame than what, they originally thought. We thought that, or economists thought that jobless claims were going to be at about 235,000, but they were actually at 227,000. So this just basically means that, less people were saying, that they did not have a job, versus what was expected. And then you had people like Tom Lee, and Tom Lee, this is Tom Lee. If you don't know who Tom Lee is, he is a very popular investor who he's very bullish. He tends to be bullish on the stock market. He tends to be right a lot of the times. He basically said that he felt like the bottom was in and that we would probably, see new highs from here. And then he also mentioned about in which he has been talking about the Russell. So I always talk about the NASDAQ, the S&P 500, and the Dow. So those three are like the major indexes, but the Russell is the small cap company. So if you think about it like this, if interest rates are high, when they're high, companies that have a lot of money on hand, like Meta, Apple, Google, cash-rich companies, they could grow their business a lot easier than a company who would have to borrow money. Okay, so like Meta, Apple, Google, all these mega cap companies, they have a lot of cash on hand. They're cash rich. But when the Federal Reserve starts to cut interest rates, then you have smaller cap companies who have to borrow money a lot of times to, see growth. It's easier for them to borrow money at, cheaper rates. So, and especially because at the first half of the year, you saw like the rally was led by the bigger mega cap tech companies, the Mag 7 companies, whereas, your laggards have been the smaller cap companies. So Tom Lee and a lot of other investors basically think that, it's time for small caps to, see some love, get some love from investors. And especially because there is a lot of cash, meaning that people who have a lot of money to invest, they are kind of sitting it out right now. So when the Federal Reserve starts to cut interest rates, you know, you're going to wonder like, where are these people going to put their money to try to get the best bang for their buck? And a lot of people think that small cap companies are going to benefit the most, which if people invest in small cap companies, you know, you could see the most return on your money. So we'll see how it works. If you're interested in an index, or if you're interested in the ticker symbol that tracks the Russell 2000, it is the IWM. And I actually put it on my watch list because I've never traded it before. So I'm probably going to trade it in my Sim account first, just to kind of see how it trades. And then, you know, I may pull the trigger on it and actually trade it live, but we'll see. But yeah, so that's what happened last week in the stock market. All right, so what's coming up this week? So there's not much big macro news coming up this week about the stock market. I think the only news that we may get is the FOMC minutes, which basically, you know how I mentioned in episode 1 that we have these Federal Reserve meetings that happen about 8 times a year. Well, after about 3 weeks, they release their minutes to the public, and it just kind of goes a little bit more in detail about what was discussed at these meetings, to kind of give investors a little bit more insight onto where we may be headed for, you know, interest rates. And speaking of, there is a meeting at Jackson Hole, which will have our Federal Reserve Chair Jerome Powell. He will speak. He's going to be speaking on Friday, I believe. So be on the lookout for that. If you want to see what he talks about, tune in to CNBC. They normally always kind of highlight or show you some of the highlights of what he says if they don't show the entire speech. But a lot of people are expecting him to say that interest rates will be cut. And some people are pricing in 25, and some people are saying that he's going to cut 50 basis points. So basically a quarter, or is he going to cut 0.5%? We'll see. I personally think it's probably going to be 25, but I mean, who knows? He could, come out and say 50. But yeah, so that's going to be something to be looking out for. And then Nvidia has not reported earnings yet. So most of your mega cap Mag 7 companies have reported earnings. Nvidia is not going to be reporting until August the 28th. So not this week, but next week. So be looking out for them to report. And honestly, I think that once Nvidia reports, I think Nvidia is going to beat earnings. I think that they may send us to a new stock market rally, but you never know. But I really think we may see a new rally once Nvidia reports. But coming up this week, as far as earnings, we do have some of your retail companies that are going to be reporting, like Target, Lowe's, TJ Maxx, Macy's, and it could give us some insight as to how the consumer is doing, but we'll just wait and see. Walmart did have a pretty good quarter. They reported earnings last week, and they mentioned, they beat earnings, and they mentioned that the consumer for them has been pretty steady. So, and that was another reason why markets did rally last week. So we'll see what this week holds. I hope everybody has a good week in the stock market if you are trading, and if you're just kind of still trying to get your feet wet, trying to get all your ducks in a row, trying to learn what you need to learn. Check out your Sim account. If you missed what I talked about in my day trading video, I will link it, and it's just a very intro based video, just kind of getting you to understand like some of the terminology when it comes to the stock market. That way you can kind of better understand what's going on, because I know, most of you probably have no prior knowledge of the stock market, which is totally fine. But my thing is, it's a lot of times the stock market is only intimidating because it's new, and it's a lot of times anything that's new is intimidating. But once you start to hear it more and learn what you need to learn, it's not as bad as, I promise you, it's not as bad as you think it is. So yeah, I will link that video in the description box below. Okay. All right, so now let's get into Trader's Block. I'm sure a lot of you have been waiting for Trader's Block. Shout out to the person that saw that I did call the S&P going down to 510. And people have been asking me about supply and demand and how I read charts. I will make a supply and demand video. Multiple people have asked about it, and for me, supply and demand is the foundation for reading stock charts, in my opinion. People ask me about indicators. I really don't use much indicators. I'm gonna be honest. For me, supply and demand coupled with proper risk management has worked for me. The only indicator that I do occasionally use, I will pull up the exponential moving average or the EMA, and sometimes I do look at the 9, the 20, and the 50 day, but I don't rely on them. Supply and demand is my go-to. She is my girl. Yeah, but I will definitely make a supply and demand video, so be on the lookout for that. I will try to get that to you guys by the end of this week. That is my goal for the supply and demand video, so be looking out for that video. But now let's get into Trader's Block. So I have my charts pulled up, and I am in TradeStation. For those who are wondering, I do use TradeStation. I kind of play in Thinkorswim at one point, and I've honestly been thinking about possibly using them too occasionally. And the only reason why I've been thinking about it is because occasionally, which TradeStation has gotten better about it, but I've had instances where I was in TradeStation trying to make a purchase or a trade at a really important time, and it just would not happen for me. But they're working on it. So let me know if you trade with Thinkorswim, if you've experienced the same glitches, or if I should just maybe stick to TradeStation and just kind of just deal with it. But yeah, let's get into the trade. So first, I have the Tesla chart pulled up. I have already charted this. So as far as my stop loss, so I'm going to show you. So indicator, I did mention to you that the only indicators that I do use is the EMAs. I use the average true range, but only just to calculate my stop loss. So the average true range, and this is over the last 14 candles, it's just giving you an average on how much the price of the stock moves. So with Tesla, you can see that the average true range is at 11.85. Okay. So what I do to find out where I place my stop is I take 20% of that and I place it at the low of my zone. Okay. All right. So I'm going to take that off the chart so you can see my chart a little bit better. So I'm going to take the average true range off. Okay, so 20% of that. So I'm going to go ahead and tell you that 20% of that is about 2.4. Okay. All right. So down here, so when it comes to supply and demand, there are levels where basically people are buying at, and then there are levels where people are selling at. Okay. So here with Tesla, so this long green candle was from that sell-off that we talked about. So this is where that price opened. So this candle is green, so that basically means that morning the price opened all the way down here, and so it bounced. It was more than likely bouncing off of this right here. There was more than likely some buyers here, but when it bounced, it went up here, and then it kind of basing basically just means that it goes sideways. So when a stock goes sideways, to me that says that investors don't really know if the price is going to go up or go down, or basically like a tug of war between the buyers and the sellers. Okay, so there's not really much price movement at all. And then here on this day, this was on the 13th, the price went up. Okay, so it kind of left out of here. So this tells me that the buyers took control of all of this this noise here. Okay, so then price kind of went down here because it closed up here. So red candle basically means that the price opened at the top, but if it's red, that means it closed lower than where it opened. But here, this was on Thursday. So this was after we got, good retail numbers, good initial jobless, weekly jobless claims number came in. So the market was, pretty much overall bullish on Thursday. So we had like a little gap right here because the price closed down here at 201, but then when the market opened, on Thursday. It closed at 201 on Wednesday, but then when it opened on Thursday, it kind of gapped up to 206, the 206 level, and it shot out of there. Okay, and it closed up here at about 216. Okay, so my thought process is, okay, for you got to think about the psychology, because trading is not just about charting, it's about, psychology, because honestly these candlesticks is the psychology of most traders. Okay, it's telling you what people are thinking. So the price went down and then it shot out of there. So when this price comes back to this zone right here, more than likely people are probably going to be, trying to get back in, or trying to get in at this level. So what I'm going to be doing, this is just me, when and if price comes back down to the level that I have charted is at 205, about $205, I will be looking to take a position here. Okay. But if it doesn't, I just missed it. I'm not going to do anything with it. I'm not going to chase it. I just missed the boat. Okay. You have to tell yourself that when you're charting. If you missed it, you just missed the boat. Okay. But if it does come back down to 205, I'll be looking to take a position. But if it starts to go against me, I'm going to get out at about $196. Okay. So you may be wondering, oh, we get 196. Actually, my exact number is at 196.35. I got that because, like I mentioned to you, that average true range, I take 20% of that, okay, which was 2.4, and I'm going to subtract that by the low of this candle, which the low of that candle was 198.75, okay? So 198.75 minus 2.4 is $196.35. Okay. So if it hits that, I'm out of the trade. I took my loss, but you have to determine how much you're willing to lose before you place this trade. Okay. So I chart this was charted before I'm even talking to you now. I try to chart on Friday when the market closes. I chart while the market is closed, and I do this because if you try to chart as the day is going on, you're going to notice you're going to be biased towards a lot of things. You're going to be forcing levels, things that really don't make sense, because while the market is actually, open, your emotions are kind of at play. So chart before the market opens. You don't necessarily have to chart the night, but just make sure. I would do it before the market opens. That way all of your emotions are out of the picture, and stick to what you chart. Okay. All right. So I mentioned that. So I'm getting in at 205, out at 196. If it goes against me, 196.35. Okay. So then most people are always trying to figure out, where do I get out? What level should I say, I need to take profits? And this is a thing that a lot of people struggle with too, because this is the greed side of things. You'll see you're making money and you're like, oh, I think I can get a little bit more though. No, like, determine where you're going to get in and where you're going to get out before you set this trade. So the sellers, where are people selling it? Okay. So this right here. So this was a level right here where price went down, right? Because the price closed at about 220, 220.50, 223, somewhere around that level. But the next morning on this day, this was on back in July 31st, the price jumped up, it just stopped here. It jumped up. Then it got stopped out, probably more than likely because of this whole situation right here. But it stopped and then it sold back off. Okay. So if price goes back up to that level, more than likely it could, meet some resistance right here, or it could meet some sellers. So I will be looking to take profit at this level. Okay. And that's it. It'll always be another time to trade. Just remember that. Okay. All right, so next up I have Nvidia's chart open. So with Nvidia, I'm actually gonna probably be taking a leap on Nvidia. So a leap option is basically an option that has the expiration date of a year or even 2 years out. It's just a long-term option. So I'm not really like super bullish, like have a firm belief in a lot of companies, but I do have this strong belief in Nvidia that it's a super solid company. The numbers are great. They're growing. As I mentioned in my previous video about options, Nvidia made me the most money that I've ever made, that I've ever realized in a single day. And here was the actual profits that I made on that trade. And on that trade, basically, I bought some out of the money call options. And an out of the money just basically means that I bought like I want to say like a 10-15 call, and the stock price was at like 9.15 at the time. And then, when Nvidia reported earnings, we had this huge rally in the stock due to not only them beating numbers, but also they reported the 10-for-1 stock split, which caused further upside in the stock. So yeah, so I'm very bullish on Nvidia, but this is the trade setup that I have in the leaps, where I plan on getting in to purchase these leaps. So here on this was on the 13th, so August the 13th. We had the price of Nvidia, it went up. We saw some upside, and then we had this hangman candlestick right here. And a lot of people say that this candlestick is bearish, meaning that the price of the stock is probably going to go down the next day, because it just basically means that buyers are getting weak. But what happened was on Thursday, the price went up. So with this, you have to, with a hangman, you have to wait for the confirmation, basically meaning that if this candle here on Thursday went down, then it would have stood, it would have made sense, but it went out. So once again, like Tesla, my thought process is, if it comes back down, and the level that I have charted is at about $118.53, this is where I'll be entering this trade. And if it comes back here, this is where I'll be buying some call options. Okay. With this one, with like the Tesla trade I mentioned, I did have a stop on that, because this is a leap, meaning that I have so much time and I'm planning on holding it. This is more like a buy and hold position for me. If I buy it, a year out. So the stop doesn't really, I'm not going to be really looking at a stop loss. If it goes down a little bit, it's fine. It's more like a longer term position. And then if it wasn't though a long-term position, this is the level up here that I would be looking to get out at, which is at about your 134, 135 area. So, this is the setup that I would have if I would be playing this, more like a swing trade over like a week or so. But because I'm buying a leap, I plan on holding this for an extended period of time. Okay. And who knows, I may take a shorter position and then also take a more, a longer term position as well. But as of now, I plan on just buying leap options on this. Okay. So as you can see, once again, price went up, it stopped. It was some little indecision here, and it was probably because of this level right here. As you can see, the price went up on July 31st, and then it came back down. So it was being stopped by this situation right here, but then it broke through that. So once it comes back down, I think it's going to react, and then it's going to bounce off of it. So the 118.53 is where I'm at on that. Okay, on Nvidia. Next up, I'm going to pull up Broadcom. So pulling up Broadcom, I have this charted. So let me chart this up. I'm gonna be honest with y'all, I trade on my phone a lot, because I still do practice as a nurse occasionally. So when I go to work, I have charts on my phone that I like to look at. So a lot of times when I come on the desktop, the same charts, they don't transfer over to my my desktop version. But so this is the level I have charted on Broadcom, which is at $158 like in 2 cents, but we're gonna say 158. So my plan is to basically get in. If it pulls back to 158, it'll take me out of the trade. My stop loss was down here at about 152.78, and then I take profit on this trade. When I charted this earlier, was at 173.33. Let's see where I got this charted at. 173.33, which is really about right here. But honestly, Yeah, about right there is where I have it charted it. You can see like price went up, it kind of went to the side, and then it came out of there, and then it just kind of started going down. So yeah, that's my level on Broadcom. And once again, price went up. You got this little doji, and then it gapped out of there on Thursday. So if it pulls back, I plan on getting there at 158. And then the last thing I want to show you is SPY, which is the S&P. So for SPY, this is what I have charted on SPY. Supply and demand. This is all I trade: supply and demand and risk management. Okay. So the price went up. Same thing really for all the stocks. Went to the side, had a little indecision candle. People didn't know whether or not it's time to sell or keep buying. And then on Thursday, once again, it shot up. So my take profit, or let me start here. My entry would be at 143.75, and then my stop would be at 537.92. And again, remember, I take the average true range and I take 20% of that, and I subtract it from the low of whatever is in the level, whatever candle or candles is in the level. So the low of this candle was at 540.12, subtracted by 20% of SPY's ATR, which is 2.2. And you can add the ATR on any trading platform. You have to go over to studies, you hit it, and then just drop it over there, and that's all you do. But I took it off because I didn't want to keep it on because it makes the chart smaller, so you guys can see how I chart the way I chart. And then for where I will be getting out at, I'm looking at about right here, which is at about 556. Actually, this right here, I probably would have to acknowledge this first. So it's a level right here, really, that I will probably acknowledge first. So basically, the price kind of gapped down here, and then it was being stopped. Like when it gapped down here from up here at this green candle, and this gap right here, this little red candle, that gap was being stopped right here because the price here started going up. And you see, like, we're in this uptrend. So when this came down, and then here you had this long red candle out, I think that and you can see if someone took this trade, this candle right here that was made on 7/23, it went up and it reacted to that, and then it came back out of it, as you can see. So I probably would have to acknowledge that first, being the take profit level, because I mean, you just gotta give, you gotta give what you gotta do what the chart gives you. So yeah, that's it. And then the last one I'm actually gonna pull up, I know I said SPY was the last one, I'm gonna pull up Amazon. So Amazon sold off after earnings right here. So that's why you see like this big space. So anytime, like if a company reports earnings, you can't see, like, this is basically what happened after hours, like this big gap. So I'm gonna try this for you. One thing about gaps normally fill. They may not fill the first time, but typically they fill. So let's see, let's chart this. So you can see I'm charting this gap. So this is a seller's gap, meaning that people sold off and it dropped from here on earnings day to all the way here when the market opened that next morning. Okay. And so this was that day where you saw that huge sell off on the 5th, and then the price went up, and then here we've been kind of going up ever since. Well, now we are in this gap. Okay. So if I wanted to take this trade, it may not be too late. So I actually charted this that, showed potential on where I may get in. So we're in this gap. So actually this right here, so price went up, it stopped, and then it went up again. So this week, if it comes back down here, I honestly feel like it'll probably stop here, which is at about $172. So if Amazon comes back to 172, I may be looking to take a position. And don't think I'm going to open up all of these trades that I'm showing you. I'm just showing you, I chart multiple levels before the week. That way I have options. But I am not going to be taking all of these trades. I normally only have 3 positions open at one time, and that's just for risk management purposes. So I'm not going to be taking all of these trades. I just wanted to show you what I did chart, and hopefully that gives you some insight as to, you know, how I look at supply and demand, which once again, be looking out for that video. I will be showing you guys. All right, guys, thank you guys for tuning in. That is it for this series. Thanks for tuning in to episode 2. Episode 3 will be dropping next Sunday, so come back to see how we did on the trades, if I took any. Once again, all of the trades that I showed you, potential trades, they're just that, they're potential trades. I'm not going to be taking any of those if they don't hit my levels, and I'm not going to be opening up all of those. But you know, we'll see how it goes Sunday. I did mention that I was already in one trade, so I did open a call option on PayPal. PayPal has been a stock that I have felt is very undervalued. People have just been like, every time you get a little run on it, it has always been sold off, but it kind of made a breakthrough on Friday. So I did open up a call option on PayPal. So we'll see how it plays out. I didn't show you on Trader's Block because I'm already in it, but we'll see. So yeah, thank you guys once again. I will see you next time.